Stock markets struggle to move higher as price stalls at key resistance. Will we finally break through this week to the upside, or will support fail, bringing another big leg down? This is technical analysis of the stock markets, update and forecast for the week of October 5th, 2020. Traders, I'm Richard Graham. We're going to start out by taking a look at the S&P 500. This is the 1-hour chart, and here last week we were stuck in this trading range for just about the entire week and couldn't get above or below major support or resistance. This is going to be a key week coming up. As you can see, we came up and tested almost right here at this 50% Fibonacci retracement level of the initial move down that started right here at the beginning of September, where we had this initial move up after several weeks in this upward sloping channel. We hit the top of the channel, sold off hard, paused a little bit, then came down to the bottom of the next channel that I drew in here. Another measured move down, came up and retested some previous support as resistance, came up and tested it again, couldn't get through that key level, and then we sold off hard. Another measured move down from the original sell-off down to this area here, and then I kept drawing in more and more channels to the downside. And as you can see, this became resistance right here at about 33.25, and we had a time getting through it for a while. At the beginning of last week, we did bust through it, but now we're trying to decide where we're going to go. We're like right in between the bulls and the bears. So this coming week is probably going to be really important. One thing to keep in mind is we still haven't broken through this major level of resistance at about 3,400, or a little bit above that number. If we can get above that number, that's really going to be a good sign for the bulls, especially if we can get above this area of about 3,440. This would be the 61.8% retracement of the initial move down. We're not there yet. And a lot of times, price does turn around at the 61.8% retracement level. That is considered the golden ratio. But we're having a time just getting above the 50% retracement level, and so that's something that the bears are looking at for possibly a rejection and a move down lower. We're just going to have to see what happens this week. This is the major level of support right here, this green line at about 33.30. The major level of resistance is right here at about 34.25. And if we break to the downside, we're probably going to come all the way down and retest these lows right above 3,200. Back out on the daily chart, if we break that level, we'll probably come all the way back out to the next level of support right around 3,000. Here's the island reversal we had in June, and this acted as a major level of resistance. When we broke through it, we came back and retested that level, and if we break it, there's not going to be a lot of resistance taking us all the way down to around the 3,000 level. As I've said before, the Fibonacci projection from this initial move down, if we take it to the swing high, the golden ratio of 61.8 extension will take us right down to the 3,000 level. So it's important for the bulls to conquer this level right here if we're going to be able to turn to the upside and get back to those all-time highs. Right now, we are sitting at an important level because we are still below. See this level right here? This is a very important key level. This is the all-time highs in February, right before the big coronavirus sell-off. 33.80 or so, maybe 33.90. Either way, we're sitting just below those levels, and so that's acting as a major area of resistance as well. So it wouldn't be bullish this market until we can get above at least that number, probably this level right here at 34.30, and probably even this level of the golden ratio retracement of 61.8. Even if we get up to those levels, we're probably going to come down and retest some of these areas for support again. There's been a lot of damage in the market, and especially this time of the year, September, October. And if we look back at most stock market crashes, they generally happen in October. If we get a measured move from the initial sell-off that began up here, and we take it down here, that will bring us down to almost the 3,000 level. So, but before we can get there, we're going to have to break that 3,200 level. Keep your eye on that. Let's take a look at the Nasdaq. This is the Triple Qs, the ETF fund for the Nasdaq. And as you can see, we had the February sell-off, and then we had quite a rally busted through those all-time highs, and we went all the way up to the top of this trend line, this upward sloping channel right here, early September, sold off, and we come back and retested the lower part of that channel, and we just couldn't get through it. Now take a look at this trend line in red. It goes all the way back. You can take it all the way back to 2018, and that should act as some support here. If we break that major area of support, which lines up with right around 260, then we're probably going to sell all the way down to the next level of support, which might be right around 240. Look at this area right here. We have some resistance that we're going to have to get through. And it looks like we were rejected right here at this level, and so we're going to have to keep our eye on that in the future. If we can get above this level, then I can say that the bulls are back in control. At this point, it looks like the bears are in control of this market. However, lately, the Nasdaq is the better performing market out of all of them. Here's the Dow Jones Industrial Average. We've been on this downtrend for several days, ever since the September sell-off. We broke the upward sloping trend line, come back and retested resistance, and we've been rejected, and now it looks like we're heading back down. So we're going to retest these lows possibly right around 266. This is the IWM. This is the ETF fund for the small cap stocks, the Russell 2000. If we can't bust above these areas of resistance, we could sell off all the way down to these lower levels of previous support, right around 146 and possibly down to 142. Let's take a look at the VIX. This is considered the fear index. Normally when you're in a bull market, the VIX is right around 10, 11, 12, 14, 15. Anytime it's above 20, it's time to be cautious in the market. When we had the February and March sell-offs, we gapped up to this area right around 22, and we've been not able to get back below 25. 25 has been an area of support, and then we had the big market sell-off in early September. This is the price of options on the market. If we look at the VIX term structure, we can see that we have a mixture of bullish and bearish signals. So these are the prices of the VIX futures contracts, and as you can see, the difference between the first and the second one are in contango at about 3%. Not a lot of contango there, so that's just slightly bullish for the market. However, the rest of the term structure is in backwardation, and whenever the market is in backwardation, that is considered a bearish signal. So we have both a bearish and a bullish signal as far as the slope of the VIX futures curve. However, we are above 20. We're above 25. In fact, spot VIX is at 27, and then we have November VIX all the way up at 33. So this is quite elevated. Options traders are pricing in a big move between now and November. The major cap-weighted stocks are what drive this market, and here's Amazon. We were in this upward sloping trend line. What a bullish trend we were in, and it all got broken in early September. Came back and retested this trend line, and now it's going to act as resistance. Came down, retested this major level of support, and it is holding. However, we are coming up into this area, which could be considered resistance as well. In fact, we rejected it a couple of days ago, and we could be coming back down to retest that support right around 29.12. If we break that, the next level of support on Amazon is going to take us all the way down to about 25.05. Here's Apple, same thing. We broke the bullish trend, and now we're coming up to retrace the sell-off. If we get a measured move equal to the initial sell-off, and we take it to the swing high, that'll bring us back to this major level of support right around 82. But first, we got to get through this area of support right around 99. Here's Microsoft. We broke the bullish trend, coming back to retest this major level of resistance, and we have this major level of support way down here at about 150. Google is looking pretty bearish as well. We broke the upward sloping trend line, came back and retested it, and now we've hit this area of support. Keep your eye on this level right here as resistance, 1558, and if we break this level of support at 1400, it's probably going to take us all the way down to the next level of support at 1290. Here's Facebook. We broke the upward sloping trend line, came back and retested it. Looks like we're getting rejected. If we break this key level of support at 247, that's probably going to bring us all the way down to 219. Tesla's not a major cap weighted stock, but everybody's got their eye on it because we are in this triangular pattern. Which way it breaks is going to be important. We have a lot of support right here and a lot of support right here. Generally, it's an uptrend, so I'd be bullish Tesla until it starts to break these areas of support. Here's Bitcoin. We were in this consolidation range for quite a while. We broke down, hit support, come back and retested this area of resistance. Now we're in no man's land. I wouldn't be bullish until we can get above this key level of resistance right around 11,200. If we break that, we'll probably come back to this major level of consolidation that we had right around 9,200. TLT is long-term government bonds, and they were in this bullish uptrend for quite a while. We had the big sell-off in February. We had all this volatility in February and March, and now we've just been coiling up and not really going in any direction. Usually when the stock market sells off, bonds do well. But during the big correction we had in the spring, bonds and stocks sold off together. The same thing happened with gold. Check out the price of gold. Right now we're sitting at this level of resistance that used to act as support right around 1900. The current level of support is at 1850. But there's a lot of support that we can find right around 1800. I expect people to step in and buy when we get down to those levels. Right now, I wouldn't be bullish gold until we can break these levels of resistance. Here's silver, a very similar situation. We were in this bull flag pattern, and usually they break to the upside, but that's not what happened this time. Broke to the downside quite heavily, and now we're at the bottom of this upward sloping trend line acting as support. I'm not going to be bullish silver until we can break these previous levels of support, which will now act as resistance. Everybody's talking about the dollar, and it really is a dollar story because when the dollar does well, we often have a sell-off in the markets, whether it's precious metals, whether it's the stock market. A bullish dollar is usually not friendly. Right now, as you can see, we've broken through a lot of areas of resistance on the dollar. However, we are in this long-term downtrend. However, we did break through this major long-term trend line, and now it's acting as support. If the dollar continues to rally to the upside, that's not great news for the markets. So keep your eye on the dollar. Headline trading risk this week. Watch out, Monday morning, manufacturing. Wednesday, crude oil inventories, the Fed meeting minutes, and the Fed statement. And then on Thursday, 8:30, initial jobless claims. All right, guys, that's the picture. It's really important this week that we get above these major levels of resistance. If we don't, we could have another big sell-off all the way down to the 3,000 level. If you like these kind of videos, make sure you hit the like button. Also, if you haven't already subscribed, make sure you do that. That way you don't miss my next video. I put the link in the description. Also, you can get real-time trading alerts, as well as 12 free trading lessons and access to 7 free videos. Also, information on how to become a funded futures trader. Have a great week trading, guys, and we'll see you next time.